Hey y'all, welcome to the filling station. I am super excited, y'all. So let me go ahead and give my disclaimer. I am not a financial advisor. I just enjoy teaching people how to build generational wealth, and the stock market is just one of those avenues. So this video is for educational purposes. With that being said, let's get started, y'all. So the purpose of this video is to show you how most stocks respect the 5 EMA. So we're going to call this one, let's ride the 5, right? I say that all the time because most stocks respect the 5 EMA. And if I was to show you this, by looking at this chart, when I first started trading, I will get overwhelmed because it was one, learning something new and seeing all of this stuff and not really understanding what all of it meant, right? So I use the example of trading is like putting a puzzle together. You learn one piece at a time, and then once you learn that, you apply that to your puzzle, and then you move on to the next piece. So we're going to try to build from there. And today we're going to pay attention to this light blue line here, which is my 5 EMA. So by looking at this, you're seeing that it is away from all of the other moving averages, and I'm going to take those off, but I want to show you what they are first. So we're looking at the 30-minute chart, and on my 30-minute I do have my 200 EMA only so that I can see where the stock is in reference to the 200 EMA. I do use the 50 EMA on a daily basis. I use the 20 EMA and the 5 EMA. Those are my everyday moving averages, and I use the EMA and not the SMA, and the only difference between the two is time. One is faster than the other one. So yeah, let's go ahead and get that out of the way. Some people like the simple moving averages. Some people like the exponential moving averages. The only difference is one is faster than the other one. And you just figure out which one works best for you. So I'm going to go here to edit studies, and I'm going to take off the 200 off of this one, and I'm going to take my 20 off of this one. And the only reason why I am leaving the 50 is because a lot of times I use the 5 and 50 crossing so that I can enter my trades. And the market is open. This is pre-market that I'm recording this, and it's easier to see it on the 30-minute versus the 5-minute at this point. If the market was open, we will be using the 5-minute. However, I use the 1 or 2 minute, whichever is easier for you, the 5-minute, the 30-minute, the 1 hour, and the 4 hour. The higher time frames just give you a wider view of what you're looking at. So if I was to look at this on a 5-minute, it just looks a little bit more confusing. One, I didn't take off the averages, moving averages, and it's just a lot more information, right? This right here is a little bit clearer to understand. So that's why we go to a higher time frame so that I can get a clearer picture as to what's going on. This is the 30-minute. This will be the 1 hour. Again, I can see it in a lot clearer. I understand it a little bit better because a lot of the noise has been taken away once I move up to a higher time frame. And this is a 1 hour, and see how it just consolidates everything for me, and I can see it on a more compacted level. But I understand, instead of trying to look at all on this range, and it's like, okay, it's overwhelming. So yeah, that's the reason of the, moving, not, that's the reason that we use the different time frames, because it gives us a wider view. We can see it a little bit clearer. So, okay, back to the purpose of the video, which is the 5 EMA. If you notice, most stocks respect the 5 EMA. This is the 5-minute chart, and again, this is pre-market, so the market is actually moving now. But do you see how we're looking at SMCI? Do you see how it is riding the 5 EMA? It is moving with the 5 EMA. So I took the rest of the moving averages off the 30-minute chart. So we're looking at it from a different view. But do you see how most stocks ride the 5? It is staying with the 5 EMA. So right now, if the 5 EMA is easier for you to recognize and to pay attention to, then maybe you can start with that and just add that to your puzzle or to your charts, let's say. And then, we can gradually add more. So I'm going to look at just different stocks so that you can see how it moves in relation to the 5 EMA. This is Apple, and we're looking at the 30-minute chart. And as you can see, it is moving with the 5 EMA. Now, if I was to go back to a smaller time frame, which would have been my 5-minute chart, do you see how right now it's pre-market, so it looks a little bit jumbled together, but you still see that it's still with that blue line. Most stocks respect the 5 EMA. That's something to think about. That's something to be mindful of. This is Amazon, and as you can see, Amazon is respecting the 5. It's riding the 5. It's with the 5 EMA. And if I was looking at calls, or the first thing, if I was to trade options, I would say, where is my candles in relation to the 5 EMA? If my candles are under the 5 EMA, I surely don't need to be to the upside of the trade. I need to be to the downside of the trade. And if it's to the upside, it needs to be above, like here, it would need to be above the 5 EMA. So right before I take a trade, I always ask myself, where are my candles in relation to the 5 EMA? This is CMX. And right now it's a little bit choppy and a little bit different. So we'll go to Mara and see. Yeah, okay. So Mara runs with Bitcoin, right? So this is a good example of why I use the 5 and 50 crossing for my entries. However, do you see that it is respecting the 5 EMA? It is riding the 5, and most stocks ride the 5. I will say that often, right? So I left the 50 EMA because this is how I actually started trading. I got a little bit more confident in my trading, is waiting on these two lines to cross. The white line here is my 50 EMA. The blue line again is my 5 EMA. And once those two cross, I would enter my trade. I would look for confirmation with my MACD, and that would give me confirmation to it's okay to take this trade. So I would enter and I would ride the 5 until it gave me signal to get out of the trade. And then you see most of the candles are above the 5. Well, once it start coming down under the 5, then I sure don't need to be to the upside, because I've changed directions. I have shifted directions with my 5 EMA. I need to be in puts at this point, because I'm coming down with the 5. I'm riding the 5. I rode the 5 up. I'm riding the 5 down. And I use the MACD and the 5 and 50 crossing as a confirmation. And that's exactly, I would literally wait on the MACD to cross, or wait on the 5 and the 50 to cross before I would even enter a trade. And it was easier for me until I got a little bit better with using the different types of moving averages as my support and my resistance. This is Meta, and as you can see, Meta is respecting the 5. It's riding the 5. So yeah, it's really important that we learn how to use the moving averages, because they will really help us with, again, support and resistance. However, if it's overwhelming, start with your 5 EMA, because it is really helpful to see that most stocks are going to trade with the 5 EMA. It's either going to be above it or it's going to be below it, and you make your decision based on what you see. I always say trade what you see. This is Netflix, right? Netflix is respecting the 5 EMA. We ride the 5 wherever your candles are in relation to the 5 EMA. That's how you trade, or how you make your decisions. Yeah. And it's really, sometimes we can make it complicated. Nvidia is one of those. It's had some earnings and it's been really good. So definitely, if you're trading Nvidia, riding the 5 would be a really good thing to do until it shows you otherwise. But yeah, ride the 5, use the 5 EMA, and allow it to help you in your decision making, as far as, am I what side or what direction I should trade. And make sure that whenever you get a signal, like here and here, it was a signal to come down with it instead of to the upside with it. So you want to trade what you see and pay attention to where your candles are in relation to the 5 EMA. So I hope this is very, very helpful. Again, I use the 50 EMA and the 5 EMA at crossing to enter my trades, and that's how I did for a long time when I first started trading. The 5 EMA right now, I realize that most stocks are going to ride that wave, and I want to ride the wave with it. And sometimes I use the 30-minute chart to help me stay in a little bit longer, especially if it's above the 5 or below the 5. The most important thing is if you're trading options, is to make sure you're on the right side of the trade. to make sure that you're going with the right side or the right direction of wherever the trade is going. So this is Tesla. 5 and 50 is crossed here. We are above, we were making higher highs. We are above the 5 EMA. So I would be in calls to the upside because I am riding the 5. I would have probably gotten out at somewhere at this point because of that peak there. And I would have waited, until I had a signal to enter this to the downside, if I would have entered it to the downside. But I am under the 5 EMA. So I definitely don't want to trade to the upside when I see that my candles are to the downside. So I hope this is very, very helpful. Riding the 5, paying attention to where your candles are in reference to the 5 EMA. And we will talk more about, the different moving averages in the VWAP, because I use that often, if it's above or if it's below. And I'm a visual learner, so visually seeing where my candles are in reference to those lines helped me a lot, versus even if I didn't understand what the candles meant, I understood where the position of the line was and where my candles were in reference to the line. So I hope this is very, very helpful for you, y'all. I'm super, super excited. Listen, we learn and we grow together. We can do this. I look forward to seeing future millionaires really, really soon, y'all. Have an awesome day today.